welcome to Fintech Insider Insights. I'm David Brear, the CEO at 11FS, live from the JP Morgan e-commerce and Fintech Forum here in London. It felt only right, didn't it, really? Let's be honest. In this episode, brought to you by JP Morgan, we will be looking at the intersection between regulation and innovation, specifically relating to digital identities. The EU have announced plans to launch an e-identity, which would make a digital wallet available to all citizens and businesses in the EU. But how will this actually work? I'm not sure, really. We'll find out as the episode unpans, right? But how will PSD3 and all of the other major regulations support or hinder the potential of digital IDs? And what does this actually mean for the merchants, the shops, and the small businesses on the front lines? I get into all of this and much, much more in today's discussion alongside a pretty damn esteemed panel. And in the second part of the show, we're going to be opening up the floor, as I said a second ago, for some Q&A to get the opinions of all of the people in the room. So make sure they're good ones or make sure they're anonymous. It's up to you. Firstly, we have on the panel today Sara Castelhano, who is the EMEA Payments and Commerce Solutions product at JP Morgan. How's it going, Sara?
Good, David.
Good. What have you been up to? I mean, other than a very cold, rainy day in London, then it looks like you had a fun day.
Oh, yeah, absolutely. Thank you so much for joining us here at JP Morgan. I'm obviously a big fan of Fintech Insider and
You're just
attending. I've been able to join the podcast, and After Dark was so much fun. This is a little bit different than After Dark, but I think we can make it as much as an energy. And I'm excited. And your podcast voice, which is interesting because I listen it at 2 times. So every time I hear you in real life, I'm like, wait a minute. Oh, yeah, that's because I always think of you at 2 times.
2 times speed. So you want me to go full chipmunk in this one then?
Exactly.
So, okay. So if we go really weird, I'm just thinking you'll be listening to it on 2 times later on. So what she really means is she travels a lot for business and she needs to find something to do on a long flight, basically. So I appreciate that. But all right. And also, we're delighted to welcome John Miller, who is the chairman at Cali Group and CEO over at PopID. Welcome to the show, John. How are you doing?
Great to be here and learn.
Is it great to be here? You were telling me you're from California. Like, again, the London weather is not particularly fun for a Californian, is it?
Well, I'm only here for a few hours.
Fine.
Stopping by on my way to the Middle East.
Stay out of the rain, you'll be fine, right? But for anybody who doesn't know Cali Group or anybody who doesn't know PopID, give a bit more background.
Yep. Cali Group is an investment company. We invest in restaurants, retail, and technology companies that sell into restaurants and retail. One of our big investments is PopID, which is a platform that allows consumers to do loyalty and payment in retail without ever having to pull out their phone. So a consumer can register either their face or their palm biometric, and when you go to the point of sale or a self-checkout kiosk, you check in by scanning your face or palm. A merchant can then have a very personalized interaction and make recommendations about what to order, show you your loyalty, and then you can also pay with the scan of your face and palm, all accomplished without ever having to use your phone.
Very cool. Good job, producers. Very relevant to the topic. Good pick. We need to talk about how you productivity hacks later, about how you can be a chairman and a CEO at the same time and still, like, function. Like, I can barely do one of those things. So we'll talk about that one later on. All right. And finally, we're joined by Lloyd Owen, who is the Global Policy Director at Onfido. Great to have you on the show.
Thank you very much for having me.
For anybody who's sort of living under a rock who hasn't heard of Onfido, give us a bit of a mention and what do you guys do?
Yeah, so Onfido, we are an AI-powered ID verification provider. So we help predominantly financial services meet their KYC requirements and compliance with AML regulation.
Very, very cool. All right, well, maybe if we get going with, payments isn't exactly standing still, right? The landscape is shifting quite dramatically, and what is the value chains of payments and everything is changing. Give us a bit of an overview of, good luck in the next 2 minutes or less of like, what's happening in payments, Sara?
What's not happening in payments? I would say that 2023, we saw an enormous amount of change as expected, but what we also saw was new regulations and a lot of draft regulations getting produced. Here in the UK, we had the implementation of consumer duty by the FCA, really focusing on the underlying consumer and protecting them. And then if you look forward towards Europe and everything that's coming with the Payment Services Directive 3 and the instant payments regulation, I would say the big theme is consumer and how are the ultimate two-legged person on the street getting the right protection from regulation. And I think that that is not just focused on banks. And if I look at what the FCA has been trying to do with consumer duty, it's not just here is me as a financial institution being regulated by the FCA. It's the FCA thinking about the whole entire ecosystem, whether that's a consumer that's now buying something online and creating a digital wallet and housing cash in a third-party tech company versus a consumer that is holding their cash at a digital bank or a traditional bank. That spectrum is wide, and the regulators, I think, are now getting to a point where they're thinking about how is technology impacting our underlying consumers and how are we regulating that so that we retain their benefit and ultimately the sovereignty of our country. Because if there are impacts to your consumers, that impacts the sovereignty of your country. And especially in a cycle where we're going downwards, it's really important to focus on making sure that your underlying people in your country remain safe.
Yeah, it's an interesting one, isn't it? You say drafted, and these things are never really done, are they? They sort of the evolvement of those things, and then something comes into regulation, and then the next draft and the next draft. So, do you think it is a sort of a evolution in all of these steps?
Of course, and I think FCA consumer duty came in pretty quick and was like, you have to implement by this. But then they went into more of closed products. What more can you do? How can you audit it? So it's not just I'm coming in, I'm giving you a regulation and I'm going away. It's I'm implementing something and I'm coming to look at it. The European Union came out with draft legislation on SEPA instant regulation, which part of that is not allowed to charge more for an instant payment than you do for an ACH transaction because they want to drive ubiquity across Europe. But they come out and say, we'd like to get everybody's views. We want to make sure that this is inclusive and we're hearing from all the member states. And then it goes into more of a regulation perspective. So I do think there's been two different approaches, but both are ultimately have the right idea at the heart of it, which is protecting individuals.
I get the impression sometimes that's like when my wife asks for my opinion, but doesn't actually want my opinion, though. I don't know if you've picked up on that view slightly, but where it's like, I've heard you, but now I'm going to do whatever it was that I wanted to do anyway. But maybe I'll add on that. Obviously, the sort of unintended consequences of some of these things and the evolution of them. Things like PSD2, it's hard to do regulation across the entirety of the European Union, right? But what have some of the limitations been in that sense?
I think one of the things that we see across the piece is that at the federal, at the almost federal level of the European Union, there's a lot of this harmonising regulation, and that's really positive. And when we look at PSD2 and 3, we see a growing sort of journey towards ensuring that there is harmonisation between different elements of the ecosystem and how those interact with each other. But where the challenge then comes is at that member state level when we come to implementation. And all of the supranational requirements all come caveated in relation to how member states will then implement them. And that's where we run the risk of seeing a really complicated landscape in terms of achieving regulatory compliance. Because fundamentally what we're seeing is up to 27 different ways of implementing these requirements, additional expectations or lesser expectations that can therefore leave some solutions looking sort of over-engineered. So that, I think, is the real difficulty, is that once that harmonising regulation is in place, what does that actually look like in practice? And that is where a great deal of the dilemmas come.
Yeah. And is that a sort of is this like a weird version of agile? Like, is it like test and learn, but with regulatory governance and structure? Because you never really know what people are going to do with this stuff until the market sort of responds and reacts. And John, I guess like the different geographies have got different regulations. Therefore, the customer ultimately being the decider in this in terms of using the thing is pretty important, right?
Of course, yeah. So that is the test of whether or not any new identity system or payment system is going to be worthwhile, is if people want to use it.
Yeah.
If people want to use it, then merchants are going to want to accept it. And
People always forget that, don't they?
Yep.
Like, people have to care about the thing that you're doing. It's kind of bizarre, isn't it?
It doesn't really matter what the government says. If people ignore it, then I think it won't be useful.
Yeah.
And we saw that with open banking. We thought with the Payment Services Directive 2, it was, we'll implement something that opens up access to bank accounts across all of Europe. But then to your point, there was no, here's a standard for a connection to a bank. There wasn't even specification to say this is an API. So the promise of open banking has been massive in Europe. And it hasn't had the adoption rate because, one, you're training consumers as a whole not to log onto a foreign device. Don't give your username and password anywhere. And two, the banks aren't really incentivized to really play in that space. Versus in the UK with the implementation of open banking, where it's been very specific and you're seeing open banking and you might not even know you're seeing it when you chop up your investment accounts. Now, when I go to try to pay my credit card bill, it always defaults to pay by bank rather than paying by my credit card because it's ultimately cheaper for the merchant for me to make that instant payment transaction. So to John's point, if the consumer isn't used to it, I scroll all the way down and still pay with my credit card because it's just not something I'm used to doing.
What is the here UK and Europe in general the rails, the card rails versus these pay by bank rails, ACH, things like that, compared to the US? More popular, less popular?
Yeah, I mean, open banking transactions, as in the calls for those, are definitely going up and up and up. I think to Sarah's point, I think it was us, payment geeks who were like, well, this is going to be amazing and it's going to change. And then the increase of usage has happened over time, but it's definitely not the sort of revolution that I think everybody was hoping it would be in the beginning of it. But those things have a tendency to go through a curve, don't they? Yeah. Ultimately, like you say, you can open up data, you can open up payment rails, you can open up all of these things, but unless the use cases are fantastic for customers to really care about it, then it never really happens. Yep. But maybe sticking on that one, because obviously, payments, it isn't just the exchange of value, it's everything through that value scheme. We talked a little bit backstage about the type of experiences you've been enabling in the US. Do you want to talk to us a little bit more about that?
Yeah, I think, what we see is the value of letting people be able to interact with the merchant without ever pulling out their phone is not necessarily in the payment, it's in the check-in to your loyalty account. Once the consumer, without having to think about it, can walk up to a device and check in, and the merchant then knows who it is, can pull up the consumer's loyalty account and have a very personalized interaction with the consumer. That's where we've shown the value is for merchants in terms of increasing ticket size when you can have a personalized sale, increasing loyalty engagement, increasing the speed at which transactions get done, and then the payment goes along with it. And our view of, when you can create a new way, a new credential, a new authentication method for payment is that people should be able to link any payment method they want to that. Our view is whether it's the card rails or these bank rails, a biometric is, we think in the future, probably the most secure and easiest way to authenticate.
Yeah, I mean, it takes an extra step out of the process of doing a thing, doesn't it? But and you've been doing it with sort of like fast food restaurants.
Yeah, the focus has been fast food on self-ordering kiosks at the counter, at the drive-through, where there is every second has value because it's fast food, and loyalty has a lot of value, and the ability to make order recommendations can drive revenue.
Yeah.
So that's been our focus. It's also the case, for better or worse, in America that fast food touches a large number of Americans. Tens of millions of people eat fast food every week. And so to expose...
Should we be making that easier, should we? Or should we be adding a little bit more friction, potentially?
Yeah, that's a whole nother question. But the ability to introduce a new way to do loyalty and payment to touch large numbers of people, that's probably the best channel to do it in.
Yeah. Well, I was joking. We implemented something similar. Producer Laura, I'm sure, can remember this. It was at Helsinki. We did a live event, and you could pay by your face at the bar. And we were like, well, when people get drunk, is it still going to work? But it does. You know, I said it earlier on, if I'm really hangry, like it still recognizes you, right?
That's right. Yeah.
Good. All right, that's good. So I guess with the proposals and all the things that we're seeing around government-backed IDs, obviously we've been talking about payments, but identification, if you're using, you know, biometrics, you're using your face, I mean, that sounds like it's a positive thing in terms of those use cases, right?
Yeah, I think so. I think the vision is you should be able to link different forms of identification to your biometric, not just your payment credential, not just your loyalty accounts, eventually tickets to get into places, access to buildings, ultimately probably healthcare records as they get digitized. Older people tend to go to the clinic for healthcare treatment, and not having to pull out your phone to do a check-in is probably an advantage if you're older and you don't want to deal with pushing buttons and figuring out how the QR code works.
It feels like a natural extension of sort of what financial services organizations have traditionally been good at as well, like, you know, storing data, holding value. I mean, again, producer Laura, who's got mentioned twice today, I mean, wasn't down to come into this conference, but was able to use the authentication of showing her bank and logging into her bank as a verification of identity. So it's like, actually, this feels like it's a real logical extension. I know, you know, Onfido, you guys have looked at ID more broadly as well.
Yeah, so I think there are 2 points to that. One is that the spread of these tools is incredibly helpful. As you say, there are accessibility advantages. You know, there is reduction of friction in terms of transactions and processes, etc. But I think there is also a really complicated question of trust around the use of biometrics and the regulation that is necessary from a purely regulatory data safety, privacy and security of the individual point of view, etc., view. And there is a political necessity also when it comes to biometrics to have very robust regulation. And so the more robust regulation that's required for the spread of these biometrics and looking at the most intrusive potential use cases of these biometric identification methods, you are looking at creating an environment that becomes ever more heavily regulated.
Sure.
So you've just mentioned the example of a bar in Helsinki that recognizes your face. If there's any AI in that system under the EU AI Act, that becomes a very high-risk system.
Sure.
Because it's using the biometrics that it has stored in order to identify an individual from their biometric. That's really difficult then when you consider what does that mean for innovation? Because in order to be a good, positive actor in this space, and in order to have trust with the consumer, you're really going to have to show that you conform to these regulatory requirements, you know, beyond the financial penalties of not doing so, etc. But also, you're then looking at what are the barriers to becoming an innovative startup and disruptor in this space. And actually, are we going to see in the sort of medium term, it's not going to be about whether or not you can develop a product that's a challenger. It's not about whether you can finance that. It's going to be about whether or not you can reach a critical tipping point in terms of your ability to be compliant. And that's going to be a really interesting thing to look at in terms of these ID and biometric-driven solutions.
Yeah. And I guess a big part of that, I mean, we touched on the end user wanting it. Like that critical mass will be on demand to a certain degree as well, you know. And obviously with things like open banking, there was a lot of, you know, people are never going to give their data or they're never going to, and then like you give like a half decent use case and everybody's like, yeah, like here's my pets and my kids and all the things, you know. So do you think if you get that to a right point and customer demands, that will drive that?
So from my opinion, we went from having to get a credit card out of your wallet and loving tapping to moving to your iPhone to moving to your watch. Now, why would you not move to your biometrics? We as individuals are technically getting lazier. We don't want to move. We want to just, if I could enter the tube. And I was recently in UAE, and it was impressive to me that passport control was completely just on my Face ID. You enter flights now out of the US and you're not even putting your passport anymore. That's great because it's then locked up in your handbag and you don't have to worry about someone swiping it or stealing the ultimate credentials. I think what the Payment Services Directive 2 tried to do with the SCA was let's add an element of consumer protection by adding a text message. that's not a great user journey, because if you don't have the ability to get the text message, or you're not on that device, you're trying to order something on your computer and then you don't have your phone, that checkout abandonment rate goes up.
Yeah.
If you are then having that experience where you don't need anything, it's yourself, that then helps with the ultimate checkout experience. And I see that as hitting the objective of a lot of the regulators, which is looking at individuals and protecting them. We know that fraud is a big case across the world. We see in the UK with APP authorized push payments that our regulators are looking at, how do we protect a consumer from being faked out to make a payment to someone that they shouldn't? And if you have the authentication and you know it's me and I don't have to worry about getting a text message, et cetera, then I think that makes it a better, more secure journey. And I think regulation will come up and get to that point, but it does take a little bit of get the consumers bought in, and then regulation will follow.
Yeah, it's an interesting balancing act, isn't it? Yeah, we want it. I mean, I've been through some of those, like you say, the UAE, or I mean, it's very different for JFK. You know, like so actually, like the experience almost felt almost too easy. You know, it was a little. I walked through like somebody was going to rugby tackle me because I was like trying to break through the boundary. You know, but so that sort of balancing act between, you know, the security officer going, yeah, just shut down the internet. You know, it's too risky. Digital's not the one. But the customer wanting everything really, really simple. Finding that balancing line, you know, surely that isn't regulation that should be defining that. That's almost an internal struggle. Do you think?
I think it is down to consumers need to drive behavior ultimately.
Yeah. Mm-hmm.
So I think that once you do that passport once and you're in the UA and you whiz right through, you're like, wait a minute, why are there such big queues somewhere else? And why can't they adopt this software? It's like me personally, I have a UK passport and it upsets me when I go to Amsterdam because I no longer can go through the EU queue. So I contemplate, I'm like, did someone remove the software for my chip, or are they just doing it because they don't want us in that queue?
Yeah, they've literally done that. You see the flag still. They've just
they just put it next to it.
Get in the long queue, Sarah.
So it definitely, the consumer then is driving that asking for that behavior. And if I'm comfortable with that at checking in and going through passport control, why can't I be comfortable with that if I get into the Taylor Swift concert and I can then order all the drinks I want based off of the fact that I just have my palm with me, rather than the requirements where you can't have anything with you at Taylor Swift. You have to clear a bag, etc. As I'm preparing for August, making sure that if I could pay with my palm, that would be a better experience. I don't have to bring anything with me on my body.
Yeah, I guess you brought up the sort of element in the room then with regards to. Does none of this apply to here? Like, is this all? Are we sort of standing at the window of the European Union, going, oh, "This seems fun. We should have done this." I mean, so is this going to be a difficult thing, do you think, for potentially UK companies wanting to do work in Europe, Sarah?
I think that John's experience is very advanced in the US and JP Morgan's experience is very vast in the US, and we're hoping something comes to Europe. But I think that the difference is Europe, it's going down the government route, and in the US, it's going down the commercial route. And maybe, John, you can talk about your views on that.
Yeah, I think, well, I live in the world through the eyes of my kids. So I make predictions about where the world's going based on what my kids tell me. And so I deeply believe that for kids growing up today that are very comfortable putting biometrics out there, putting their pictures out in Snapchat and Instagram and all these things, the idea that you can use your biometric to more conveniently get into a concert and then buy a drink inside the concert. I mean, my daughter will have no questions about using her picture to do anything. And so I think we've shown in the US that young people are embracing the idea of biometrics as a more convenient way to do things. And and in the US, the regulations are such that as long as the consumer is consenting, then they are, a private business is more than welcome to use biometrics to do any kind of authentication. We've also launched in the Middle East, in the UAE and Qatar, where it's the governments and these big institutions that want to create the most advanced frictionless experiences in the world, in Doha and Dubai, are embracing biometrics and using it as a way to showcase that these are places that you have the very best experience possible. So I do feel like it's happening. It's happened everywhere in China. It's happening all over Asia. I was hoping to come here today and get a sense of how Europe thinks about these things and what is the opportunity in Europe to think about biometric payment and biometric authentication in general.
Yeah. Look, Alad, maybe same question to you. I mean, you got the local accent here. So last time we tried to sort of get a central ID in, I'm pretty sure people were burning cars and all sorts of stuff. So is that going to catch on? You reckon?
We're not the French. We didn't do that, but no. But I think in terms of the sort of central ID point, it's. And
this is why we can't be in Europe anymore.
This is why we can't be in Europe anymore. I think in terms of the appetite here, there is plenty of appetite, and here we've got in the UK specifically, a government perspective on this, which is keen to embrace innovation in this space. But we've also got to contend with a broadly privacy-minded public who are concerned about the use of their data in certain respects and will have a limit in terms of how much data they are willing to share with any given entity. That will change over time, but where we currently are is in that space. In Europe, that's magnified in certain jurisdictions. So in Eastern Europe in particular, particularly in this identity space, there is a lot more reluctance, both at the government level and at the consumer level, to have any kind of system which allows for the surrender of more of the ultimate ID sort of verification sort of possession that you have, your biometrics, to the state, or for the state to gather that information. And so that becomes a very significant pillar within all of this. That is national culture and the willingness to adapt to and work in this. Again, regulation will provide some part of the reassurance needed around this, consumer convenience and the sort of desirability of the product also around this. But ultimately, it's going to be difficult. In Europe, that magnifies, again, the effect of how the kind of overarching supranational harmonization of ID will then balkanize once it gets to the member state implementation level. And within the UK, I think there's a really significant challenge in a post-Brexit environment where there is no longer a UK seat at the table. We are very much stuck, basically, following the European lead on this. And that means that we don't have an ideal situation in which we're able to influence effectively in Europe. And we are amongst European nations in the UK, a very sort of proactive adopter of new technology and innovative means of ID and all sorts of other things. But we don't have that voice. The problem we face more than anything else is political divergence for its own sake from European regulation. And all that does is create additional friction that makes it even more complicated for business to be able to operate in that trans-border environment.
Do you think, I'm going to stick with you on this one because I think it's really interesting and a really interesting point. And actually that point around leadership or following, I mean, we did quite a good job for a bit and then we seem to have sort of spent maybe 7 years patting ourselves on the back and, saying, wasn't it great when we were doing great, do you think, like open banking, we could take another leadership position? Or do you think actually the infrastructure is not quite there in the way that it could do? Because like you say, we either wait and follow Europe or we make a stand and lead, don't we?
Yeah. And I think that there is a challenge in the UK in that you have a government that's now 13 years old and coming to the end of its life, shall we say, and is not sort of putting forward a proactive programme. So I think post-election, when there is a new mandate and there is a new approach in place, you will start to see the opportunities to bring that forward. What I think differentiates the UK from the EU in particular and allows us to have some of that leadership role despite being outside of the structures of the EU is that, taking the EU digital identity as an example, there is a very heavy government-led aspect to innovation in the European space. In the US, it's much more heavily private sector, and in the UK, it's a very healthy mixed economy, ultimately, in terms of the private sector delivering and the public sector working in tandem to try and understand the challenges and to regulate appropriately. And it's that standard that actually, I think, allows us to influence really effectively in Europe, because it's something that the officials in Brussels can look at and see in terms of an exemplar system and an exemplar way of doing things. But you need the sort of coherent government strategy and direction on this, and I don't think we have that right now.
Yeah. All right. Man, that was a sad note to leave on, wasn't it? Like we were doing okay, and now let's see. But all right, well, we great guests, great conversation, but we kind of want to hear from you guys now as well to sort of get involved in the chat. Like I say, do remember, you'll be going out in front of a bunch of other people, not just yourself. So put on a different accent if you don't want to be known. Like we can get the editors to sort of dub it slightly differently if you want to. But any questions for anybody on the panel today? Because you've got the brains here. Come on, you're very smart. Give us a question on payments, get us going.
Manuel Costescu, JP Morgan. I had the pleasure to talk to John yesterday over dinner, and we talked about both...
You're just showing off, aren't you? You're like, that guy's smart, we went to dinner. It's like, all right.
No, we were just hungry.
Okay.
And we talked about two things. We talked about digital ID, and we talked about children using phones. Couldn't the interaction between the two make it much simpler for children to be also protected by digital ID, which right now we have no way of protecting children by some of the things that are happening on their phones. And I think that could be the crux, because age verification is much harder to do by doing math or something. I still can't do the math that my 10-year-old is expected to do. So how do we do this? And isn't that an opportunity?
Yeah, I think so. Our vision is that people will ultimately attach their IDs to their biometric, and that will be a much more effective way to regulate people buying alcohol, young people buying alcohol with a face or palm scan instead of a fake ID. Actually, when I was young and I had a fake ID, it was half the fun, so we'll eliminate that fun part of it.
You remember this is going out in a lot of people.
Yeah, I just thought about that. Okay. Online as well. I think there's lots of opportunities for biometrics. Things like inside of video games, making in-game purchases where all of a sudden you get your credit card and there's a million Fortnite purchases, and your son's buying different types of shoes and haircuts inside the Fortnite game with your card without any check that of who it is that's actually doing the transaction. So I think both in the physical world, more effective authentication to protect young people from doing silly things, and then also in the digital world, more effective authentication to make sure you actually know who it is on the device and that they're authorized to be making a purchase or entering into some kind of digital realm.
Yeah.
And what I like about it is that you also can protect what information you do share, because date of birth is asked for all over the place. Like, I went to go buy a pair of shoes the other day and I was signing up to the website and they asked for my date of birth. I'm like, why do you need my date of birth? If I had biometrics, then I could click, oh, that person is of the age to purchase, rather than giving something out that is very personal. And I think we are moving into, I know kids are very open with their information, but you also have the protecting of, do we really want everyone's huge amount of information free to anyone in the world, where you can just then have a click that says they are of age or not, and then that puts the data back into the individual to control. And that's where I'm like, that's one of the most exciting things about using digital IDs and biometrics, is that the users get to control essentially what else they want to put out there.
And to add to that, the EU Digital ID has, those protections built into it sort of inherently, which is really useful. I think one of the challenges around minors in particular is, in order to provide robust verification, there is a question about what documents are required. So most under 16s, at least, in most countries will not have access, other than a passport, to a biometric document that they can then verify their identity, and for there to therefore be a robust initial verification for later authentication. And I think that's probably where some of the challenges are, as well in a UK European context, around the data protection issues and the additional burdens that places on any company that's supporting or providing those biometric authorizations in order to hold and process any of that data.
I just find it weird that we live in completely different places, California, the UK, and our kids are still doing the same thing, spending stupid amount of money on Fortnite, basically. So it just shows that I'm not sure we should trust children, actually, thinking about it. But maybe protecting themselves from themselves is a good idea. But good question. Any more for any more? Any other questions around the room? There's a show of hands.
So Sara Savage with Fexco. There's great opportunity here, right, without a doubt, as we look at the changing landscape and the ecosystem. What are we doing, or specifically what are companies needing to do to protect against the fraudsters, which are invariably one step ahead the whole way?
Yeah, it's they're pretty damn innovative, those fraudsters, aren't they? So, but I guess it comes down to the types of technology that's being used. Obviously, with any sort of limitation around those things, I sort of joked the other week is like if you start using voice biometrics and actually you happen to have put out a couple of hundred podcasts and people have got your voice, you're kind of screwed, But I guess, John, with things like the hand and vein and actually the level of sophistication, the level of security is much more significant, right?
Yeah, I think the technology is really good. So you can't trick these things by holding up pictures of a face or a palm. The liveness checks are getting so good that we won't worry about that. And I think in the end, probably there's a massive reduction in fraud when you have a biometric. Most people that want to commit fraud don't want to do it while taking a picture. So you'll probably eliminate intentional fraud. Unintentional fraud, we've seen some interesting stuff. When we launched our pilots 5 years ago around college campuses in California, because we thought that was the target audience, people growing up doing social media or people that would be interested in using a biometric to pay for something. And we had some really interesting examples where, one student at UC Santa Barbara emailed us and said, your system charged me in the middle of the night and it made a mistake. Okay, we looked into it and we shared the transaction picture with the college student. And of course, it was him. He just had too much to drink and went out at 2 o'clock in the morning and bought chicken. He said, oh my gosh, I'm so sorry. Of course, if that was a card-based transaction, he would have called the bank and there would have been a cost associated with that dispute resolution, which didn't exist because we had a timestamp picture of the transaction. So I think intentional fraud will go down, unintentional fraud will go down. And biometric is the only form of payment where you can actually create a block list where if there is a bad actor that's engaged in the system, they can be put on that block list and they can't participate ever again. There's no other form of payment like that. Mobile payment, card-based payment. There are ways to get different phones and different apps and things like that. But when you have the biometric, you can always bar someone from participating in your system. So I think one of the biggest benefits for institutions will be massive reductions in fraud as people move to biometric-based payments.
Alad, what do you think?
I think for real-world examples, I think that's very much the case because it becomes more difficult to spoof the biometrics. But in the online space, what we've seen, particularly with AI becoming far more ubiquitous and AI-driven tools becoming more ubiquitous to generate deepfakes, we've seen in the last year to date over 3,000% increase in terms of the number of deepfakes being used to test our ID verification systems online. And the two trends that we're seeing are ever increasingly sophisticated fraud and deepfakes in order to circumvent KYC and AML checks. But we're also seeing increases in volume. And it's the combination of those two things that creates greater vulnerability. And in that space, I think what we will see over time is that it will become easier to deepfake and dupe the system. There will be a case where, at the moment, companies like ours, which do this fraud detection, sort of maintain parity through the investment of a lot of resource and innovation in terms of training our models. But ultimately, we'll get to a point where we won't be looking at the actual biometric image itself as the fraud indicator. What we're going to end up having to look at then are things like the metadata around the transactions and so on. And so having more innovative solutions in order to sort of combat that fraud. But that is very much an online situation. So I think there is a twofold pattern. In the real world, it's great. It's going to reduce fraud. Online, it's going to become harder, more prolific and harder to detect.
All right. We've got time for one last question, I believe. Are you going to ask Sarah what her favourite Taylor Swift song is? Because she'll happily talk to you about that for a lot longer, but there's one more at the front here.
Hi, Hannah Broom, payments geek, but not a payments question so much. Had an iPhone since probably they came out in 2007. They've had my thumbprint since iPhone 7, and I've been paying with my face probably for the past 5-10 years. You had a big debate about kind of private sector led versus public sector led. Is Sarah's point around the ease of it just being, I'll sign up if you just make my life and my purchase journey easier, overriding versus people not wanting to give the government that kind of access? Why am I giving the access to Apple versus the UK government?
Yeah, I think it's an interesting one, isn't it? And trust, trust comes into a lot of those things there. Actually, trust in financial services organizations versus trust in gigantic tech organizations. It's sort of a different thing in there. And obviously the mechanisms for things like Face ID and everything that goes there are very different from a centralized database and a distributed setup around them. But I don't know, what do you guys think? Why do people trust Apple with everything? Or is it just, do people trust Apple, or is it just, you make it easier for me, so go on, have my data?
So I think that from my point of view, there are some people who will want to use this technology, who will be attracted by the ease that it provides and therefore more willing to share that data. There will be some who will be put off by who they're giving that data to, right? But if you just look at digital payments, cash remains king at the point of transaction in the majority of Europe, which is, the uptake is still quite slow. There are a lot of factors that sort of take you on that journey. I think the ultimate point is that if you are attracted by the benefits of using that solution, your threshold of trust for how that data is used and who uses it will adjust in terms of your desire to get the benefit of the product itself. A big name helps. If you already have an iPhone, you trust the iPhone to sort of have, whatever else you have on it. That can help reinforce that.
Yeah.
It's hard to break into that market once it's established.
What do you think, Sarah?
I also think with the launch of digital euro, cash is going to get forced out of the ecosystem by the European Commission. So that is their end game with the digital euro. And I do think that there will be two schools of thought in Europe. You have the pro-government, the banks really think that the security that the government can produce on housing data is where you want to go, but there will be a consumer element and a commercial side, because I don't think you'll ever have people going on both sides. You still have a unbanked population, not because we haven't made basic banking easier in the UK, because you have a population of people that are the doomsday preppers that have zero interest in giving their money to a big bank. So I don't think you're going to ever get harmony in one solution. I do think, though, that the big tech can use the database, and as long as you have a single source of data, the underlying consumer might be more comfortable with Apple. As long as Apple has a source to get that information, how that information is gotten to you, I don't think it really matters.
Yeah. I think it's an interesting one on the trust side, as I'm sure we've all sat in lots of airports, and I'm sure we've all given away basically every bit of identifiable information for really mediocre Wi-Fi. So if you need it bad enough, you're probably going to do it, aren't you? So, all right, on that note, we are running rapidly out of time, so we better bring this to a close. Big thank you to JP Morgan for pulling together the event, and for you, the audience, as well. Thank you very much for participating and getting involved. Thank you very much to all of the guests. Everybody wants to, I'm sure, get in touch with you guys and learn a little bit more about all the good stuff that you're up to. So, John, where can people learn a little bit more about you and your companies?
I am going to do what I was told not to do. I'm going to give out my email.
Good luck with that. I do that sometimes, and honestly, you get some weird emails.
That's okay. john@popid.com, and I will respond to any email.
Well, that's a promise. All right.
That's a big commitment.
Hit him, guys. All right, Aled, where can people learn more about you?
I'll do the same thing. So aled.lloydowen@onfido.com. But yeah, come and see our website. We've got our fraud report there that talks about that 3,000% figure that I mentioned earlier.
Very good. Sarah?
Check out jpmorgan.com/payments for everything we're doing in the payment space. And you can hit me up via my LinkedIn @Sara Castelhano.
Very good. As for me, I'm always lurking on LinkedIn, so you can find me over there. If you did like what you've heard, follow our podcast. Don't forget to leave us a review. It super duper makes us help the show get better. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, wherever you look for your socials, or email us on podcasts@11fs.com. Thank you very much for listening. Goodbye. Thank you very much.